When the economic environment becomes uncertain, we provide the truth from a breadth of perspectives to help people make decisions. We not only compile and analyze the data that moves our ever-evolving economy, we carefully craft our own to provide clarity across industries, businesses, and employment markets. We identify unique opportunities to deliver asymmetric returns and focus on capturing value created during periods of higher volatility, transforming the financial landscape together. We're MacroEdge.
Good afternoon, everyone. Welcome to MacroEdge Radio number 40. What an insane week this has been. We will have our special guest on, Mark Rossano, here in a few moments. I'm just going to do a quick review of the markets, which finished the month in a very bizarre fashion as we had another one of those trade war influenced days of market activity. Very light activity, which seems indicative of short covering considering how shallow the rally was. Dow up 112 at the close, finished the month at 42,328. You have the NASDAQ down 78 to 19,097. S&P basically flat, up 47 cents to 59,1264. Russell 2000 down 171 to 2073. Just before the close, gold was up down $26 to 33.17. Silver down 35 cents to 33.06. WTI flat at 60.89. Brent down 51 cents to 62.84. Bitcoin was down 970 to 104,500, but it was up $8,000 for the month. Not a bad rally, considering it's been all over the damn place this year. And I really don't have a good feeling on Bitcoin. I understand the concept of a flight to get away from the US dollar. That seems to be the prevailing theme for 2025. We'll see if that continues into the second half of this year, because June promises to be one of the most wild, bizarre, and interesting months in market history. Bonds, there's no point in talking about it because it's splattered all over the wall. Nobody knows what it's going to do, and nobody knows if it's going to stick to the wall or just run down in one long streak. It all depends on what happens on Sunday night when the Japanese market opens and we try to figure out which one of the insurers or banks is selling T-bills to raise dollars, as this trend has continued again this week. And sometimes it's very minor. We only see 5 to 8 pip moves in the yields, but it's a substantial amount of money moving around, and it is very bizarre. And at some point, it's going to blow up. Taco Man returned with a vengeance today. It was he thinks he's Mr. Miyagi. Trade war on, trade war off. Trade war on, trade war off. Today, it was let's blame China for everything, trade war on, starting off with Greer this morning. The one quote that stands out to me is efforts for a Trump Z call ongoing, which means that Z will not take his calls, and there's no reason for the premier to do so. He also stated that U.S. is very concerned with Chinese non-compliance on trade, behavior completely unacceptable, blah, blah, blah. Stephen Miller decided to go out there and make some statements also. We will not allow China to take manufacturing capacity from the U.S. I hate to break it to you, Chief, but you might be a day late and a few $1 trillion short on that one. And he says that we have many options to hold China accountable. Let me know how that works out with rare earth minerals and magnets and get back to me, sir. That is where we're going to start the show off. We have Mark Rossano of C6 Capital Holdings at c6capitalholdings.com. We're going to talk about energy, Asia, the trade war, and the future. You know, it's not all doom and gloom in a crazy market, especially an older market like the U.S., where things have started to deteriorate, and this bull market seems to be getting old and tired and probably should go on the grill. There are opportunities globally, and you have to identify those by looking at the youth, the education, and the future. We will talk about in the second half of that show, but Mark, welcome back to MacroEdge Radio.
Well, thanks for having me. It's a pleasure to be back on.
Well, I look forward to getting your take on what has been happening in the last 3 months since we've last talked. This trade war has not just made trading difficult, but it's made it just grievously painful for the supply chain individuals. What is your latest take on what happened today and what's been happening as far as the back and forth, especially with what's causing a certain degree of instability between Asia and the United States?
Well, it's interesting because when you look at the brief pause, if you will, after the New York court said that, Trump didn't have the power to do it, but there's a lot of reasons since 1930 up through the 1970s that Congress has been able or emboldened and empowered the president to essentially launch tariffs on our behalf. The U.S. Trade Representative Group is really kind of the stalwart when it comes to recommendations. And when you go back to President Obama and the numbers that were put together, which really kind of launched that pivot to Asia, or if you want to focus on how do we minimize China in different ways, that's where we've started to see that pivot. And it was quickly overturned by the appellate court, which I think was going to happen just given where we are on legal precedent. But going forward, when you look at what's coming, China is going to be the target. And it was always the target. It has been since what I call the Rose Garden lie, which was when Xi said the Spratly Islands were only for oceanography. We weren't going to do anything. And then within 6 months, there was advanced radar and anti-ship missiles. So that really kind of set the stage of where this was going to play out. And China was going to be the focus. When you look at how this develops, to your point, it's really going to be how does Southeast Asia respond? And the two countries that I think are really going to kind of drive this is going to be India with Modi and Vietnam. And when you look at Modi, he essentially said, look, everything's on the table except agriculture. And I think that makes a lot of sense when you look at how they're going to try to position themselves to show favor towards the U.S., but also embody that build out of that Middle East India corridor, or reestablishing it from when Marco Polo was going through those routes. So when you look at how this is being created, I think there is optionality, and China will be the target.
Do you think that the strategy should have been to isolate China first, cut deals with everyone else without the big Liberation Day celebration, so there would be most favored trading state status with the EU, et cetera, eliminating the tariff wars, and with India, versus just let's blanket the world, paint it with a broad brush? Because in my opinion, we hurt our own supply chain by making us untrustworthy and really creating an unstable atmosphere for manufacturers, retailers alike, on what to do and how to schedule imports from what source.
So to your point on strategy, that is what should have happened. When you think about it, it's going to them and saying, look, this is what has happened. You've put VAT taxes. You have put location restrictions on manufacturing. You have put local content restrictions, which are inherently trade barriers. So you've done this. This is what you've done. We need some of this adjusted to make it balance between the two of us. That should have happened behind closed doors. And then, to your point, if it didn't get to fix, then you start going into the broader market saying this is what's happening. That's what should have happened. And to your point, it should have been with our favored partners, or the ones that we want to work closely with, because all in all, we have a very similar backdrop of how do we minimize China and their influence in the market. And Southeast Asia, Vietnam, Indonesia, Malaysia, India, the Middle East are very quick to say, yes, let's do that. How do we get together to do that? And those are things that could have easily been done behind closed doors, instead of creating this distrust or an inability to negotiate in good faith. Now, Trump also probably had some sort of inclination that people weren't going to listen unless there was a bigger splash. hindsight, or really just basic planning, I think the better route would have been having those conversations, showing that we have a mutual interest in this. Let's work together. And then you could have easily gotten more ASEAN or the Southeast Asian nations involved as we use the Middle East as a hub for I think future growth.
I tend to agree with you 110%. And the thing that's bothering me about this, we started cutting the deals with Qatar, UAE, Saudi Arabia, et cetera, after the fact. But in reality, we could have cut deals with India and the EU first and isolated the bigger partners that China wanted to take advantage of. We had to cut the Silk Road, and we didn't succeed in that. In fact, if anything, we've opened it up for Central Asia as a Chinese backyard, and we've neglected that ever since we exited Afghanistan. And in fact, while we were in Afghanistan, we didn't take advantage of those former Russian republics and start to exploit the resources there and really open up some new trade options. I'm really disturbed because it doesn't show a lot of foresight, and I think the markets are starting to sniff that out. That's why I think we see some dollar weakness going on. What do you think, sir?
So realistically, I think the EU was already lost. If they didn't realize the need of working with us in the Red Sea to protect themselves, I think that they were going to need to be shaken up more than most. And I don't think that they were going to come along unless it was kicking or screaming. If you look at just the Iberian Peninsula and the failures of solar across Spain, and even though we've blatantly told them, guys, like you're going about this all wrong. Not to say that some of the New England states aren't doing something very similar, but so that would have been a hard sell. Central Asia is interesting because there's a lot of influence from China, but there's also a lot of influence from the Islamic Bank. They need a lot of support from their Sunni brethren in Saudi Arabia, in the GCC. So realistically, you are going to need the GCC in order to influence the Central Asian markets. And when you look at how Pakistan and India had their flare up, and that's going to only happen more and more, I think the focus was, how do we make India happy? Once we figure out how to make India happy, we can then use the Middle East as a juncture to get into and more influence into Central Asia. Because Kazakhstan was a hotbed of taking Chinese and other technology, repackaging and sending it to Russia. When President Trump came in, there was a very quiet conversation that if you keep doing that, all of your assets will be frozen in the U.S. And that stopped right quick. So now that you've started to get some of the semblance, and Kazakhstan has come out and said, we can't slow down oil production, well, what does that mean for some of the other areas? And is that a good or bad thing when you start looking at the uncertainty of Libya? Libya is threatening to shut off 1.3 million barrels a day with another blockade. But again, I think the linchpin still remains the GCC and how that looks. Now, you brought up Qatar, which is a great point. Qatar has been on the wrong side of history for the last, 20 some odd years. Muslim Brotherhood, Hamas, in terms of their backing, and they're trying to now use their inherent wealth to buy favor back into a lot of these countries, which is why I think you're going to see them become a bigger investor into some of these pet projects of not only Saudi Arabia, but also the Trump administration.
And most people don't remember Qatar and Saudi Arabia fought a brief war. That's what's amazing. It's an amazing history that people don't understand. Qatar was instrumental in trying to funnel Soviet and Chinese, Red Chinese at the time, weaponry to Oman in the revolution there and against the British and aided and so on. We can go through the history of that, but I'll bore everybody to tears. Let's go on to what's going on with the GCC and what's happening with China, because Saudi Arabia has cut an interesting deal this month. And I'm not sure how much you've looked at this, because as you know, I'm a bit of a gold bug. It's a bad habit, but hey, we all get addicted to something as a child. Saudi and China cut a deal where they would accept renminbi for oil in exchange for the right to buy gold from the Shanghai vaults physical gold in exchange. And it turns out that went under the radar. And then yesterday, in the midst of this firestorm about China and trade and everything, both finance ministers agreed to meet to even enhance the trading relationship. Isn't that disturbing that we're letting that happen through the back door and not really trying to force the Saudis to help us with isolating China first before they start cutting these kind of deals? Granted, they have long-term oil contracts with Saudi Arabia. I'll acknowledge that up front. But it would seem that we'd be able to apply a little bit of pressure on MBS.
Realistically, they're pulling gold out of China, which is what they need more than anything else. When you think about the issues that they're facing with just their internals, when you start looking at their real estate shortages, or I should say the funding gaps and the asset gaps from all of the liabilities that are essentially going belly up as they shutter and essentially blow up ghost cities that are proven to be defunct. So when you look at China, they need anything and everything that they can in order to continue to move product. And that's for them, they need crude, but they also don't want to get tied into the US dollar SWIFT system. So the easiest way to do that is for them to go and buy gold. Now, gold inherently is still transacted in dollars. So when you look at kind of the backhanded nature of it, you still have Saudi bringing in gold, which they want because they feel like it gives them more of a status in the global market. Their big focus has been mining. If you think about everything from nickel, copper, molybdenum, all the way to urea, phos, and potash, they're trying to get bigger into the mining world. And it's also because they figured out that you need physical assets. And to bring that in-house would be smart for them. Like, if anything, I think China made the wrong deal with that. They don't ever want to have a net deficit. Like, and I say that on a currency basis. Like, we are an inherent going to run a current accounts deficit that they refuse to run. So as much as China thinks they can or think they want to, they then have this hesitancy on running that current account deficit, which the dollar naturally does. So when you start looking at even those shipments, okay, well, you bought the crude in that, but what was the insurance paid in? What was the hedging done in? What was the ship paid for? 87%, and the 13% is really Russian, of these crude cargoes are still hedged, priced, and insured in US dollars, even if the transaction for what's in the cargo is actually in something different.
So here we go, fast forwarding to across Southeast Asia. And I've got to ask you, Australia has been put in a very interesting crosshairs. You have a lot of experience in that region, in all of Asia Pacifica. And I think that they're sort of stuck. They would like to have relations with all of their ASEAN neighbors and with India, but they really do need to have some sort of relationship with China, but they don't want to have the claws, so to speak, stuck into them with the companies operating there. Yet we want to make them into a floating aircraft carrier, for lack of a better term. Which direction does Australia, do they go to Switzerland or do they become one of our colonies is basically the question, because they've got a tough choice ahead. Yeah. Probably the toughest choice of anyone.
They've found themselves in a very similar ilk with as Canada, when you start looking at kind of this intrusion of Chinese intelligence. And I think there is an inherent fear that has been almost realized to a degree. Obviously it gets sensationalized, but they've started to see just how deep the rabbit hole goes when it comes to some of the CCP movements in their country. And I think that pushed them very quickly to join a defense pact with both Japan, the US, and India. When you start looking at kind of like, we need protection here because realistically, we're on an island by ourselves and we need to have some sort of support. Now, I don't think that they're as willing to become, if you want to think about like a further West or East Korea, but they're looking at an opportunity set to increase relations, which is something that you saw with the ASEAN when you look at the gift, quote unquote, gift of submarines from India into, I think it was into Malaysia at the time. And you start looking at some of these expansions and how they can integrate further into this defense pact, that I think it's less of becoming a U.S. stooge or U.S. aircraft carrier, but actually accumulating some of their own. It's one of the reasons, and this is something that I've gotten pushback on, we have been asking or wanting NATO to reduce their reliance on U.S. defense contracts. Not to say that we don't want to sell them contracts. We obviously want to sell them stuff. But we also have a certain queue, and we had to make room in that queue in order to supply the Middle East, India, as well as Australia. Because if we have India buying F-35s, well, our F-35s don't have to go as far to get maintenance. You know, if we, instead of being in Korea and Japan, if we have another asset in Australia, it gives us another launch point where not only are they going to be using our assets, but we can also maintain ours on flight times and the ongoing maintenance, because an F-35, I think it's like for every 100 hours of airtime, it needs 10 hours of maintenance. And so you have to have a very robust world in that regard. So even though they will maintain some of their own assets, it just becomes another launch point for us, which I think they're getting more and more comfortable with as the unknowns continue to grow with what China's trying to do with their aircraft carriers, and then their, what if you want to call them, quote unquote, swarm fleets, of how could that impact their trade routes going forward.
Well, let's move back to the west from Australia. There is a tremendous amount of mining opportunities in Australia. Yep. And I know I'm going to go into some really abstract equities if I start talking about individual issues. I'll leave that to pros like yourself. But I honestly think that that is an opportunity that the UAE, Oman, et cetera, the GCC, and of course Saudi should probably look at. But I don't know, because of their tenuous relationship with Indonesia, and folks, there's a long history of friction between Indonesia and Australia. You'll just have to research it yourself. Is it possible they can make amends and possibly start siphoning investment out of China and towards Australia to help develop their mining industry? It's nice, but it's not at the levels it should be. In my opinion, Australia should be a rare earth gold power as far as mining goes.
You know, it's a great point. And the reason why I'm going to say that Australia has no choice is because of how they've developed their LNG capacity. There is no easy way to get that LNG into their power markets. So when you look at Australia, they're actually short power and their energy costs are massive. So when you look at how the UAE, Qatar, Saudi are looking to increase their LNG capacity, it's actually a good thing, because you could say, it's like, look, guys, I need to bring down my energy costs. Let's do a deal where I'm selling this capacity elsewhere. They have firm contracts. I have no access to it. I'm built on a preserve, so there's no way that the greenies within Australia will allow me to tap a pipeline going across this into the main Australian entities. So let's come to some sort of terms. And I think those terms will be almost like an energy for mining swap. And I do think that that is one of the key reasons why the Middle East is actually coming into its own when you think of the power they can wield on an international stage. And I think that, and this is where I think President Trump is correct, I think he's right of letting them kind of lead that, because we provide them the military might behind it. They're now incentivized to move away from Australia, to move away from China into Australia, and let's be fair, Africa. And a lot of the African nations, if you ask them, do they want to have the Belt and Road Initiative or the infrastructure banks from China, the Islamic Bank or the World Bank, they'll groan, say that those are three terrible choices, and then they'll say, I'd rather deal with the World Bank and the Islamic Bank before I deal with the BRI. And I think that there's becoming a more and more of a succinct way of working together. And to your point, I think Australia is going to be an interesting test location on how well that can develop.
I really think that it's a shame that Australia has refused to develop their uranium mining capacity. Enlighten everyone who doesn't know, they have reserves that are massive compared to the United States and everybody else.
It's gigantic. And the problem is that there is still that green influence where mining is dirty. We need to get away from this. We can save the world. And I think that glass ceiling is breaking piece by piece, where they're going to lose that influence. I'm saying the green side is losing that influence. And eventually, I think you will see that get tapped, and in a way that is going to make them happy, because let's be fair, the process has gotten better. We're now cleaner when we mine, especially in a place like that. And there's a lot of ways that everybody could win.
I 1,000% agree with you. This is one of the most underexploited resources in Australia. And they could become the OPEC of uranium if they really applied their country's efforts towards that. And that would solve not only their energy problems, but probably a lot of the problems we're having in our own country, and also for India, et cetera. I really believe that's the opportunity of the future. And that's where we're going to talk about some of the sick, older countries. And I'm specifically talking about what I call the sick, elderly Asian tiger, Japan. They have the potential to become a military weapons production powerhouse. They've proven their ability in electronics, et cetera, and modern technology. Yet for some reason, they just now have started initiating a buildup, not just for domestic purposes, but for export. Is that their only way out? Because they really are so far behind Malaysia and Taiwan in the semiconductor industry now. It's not even funny.
They need, to your point, they need a cash infusion, and they need to find a way to bridge the gap, because right now you'll be shocked to know that MMT and QE doesn't work. It ends in tears. And as the country that really ushered in QE as we know it, MMT has been, as we've defined it, this is naturally where it dies. And you've seen that in the 30-year bond. You've seen that in the 40-year bond. Now they're trying to do short durations like Yellen has done, like Yellen did in the U.S., trying to protect that duration risk. But realistically, they're sitting on about $160 billion US shortfall or unrealized losses because nobody did duration hedging. So you have gaps, massive holes that have to be filled. And as we've seen with the build out of new nations or the restructuring of nations, you need new industry to really help essentially grow out of that and fill those holes with fresh capital, fresh infusion. And that industry is a very good way to do it. Now, they do have the know-how and the capacity to really compete on the semiconductor side. And I think that they're starting to recognize the fact that they can do it. The problem is, and this is where Australia would come in, and some of the other Asian nations, is bringing in the nickel, the silica, and the other that really are pivotal for that construction, because Taiwan is importing all of this, and they have an issue with their own power costs because hydro is becoming very difficult there given the shifts in rains. So Taiwan is also not the best place, if you will, to build a semiconductor. And if you need an area that could be more secluded from potential Chinese, let's say invasion, and I'm by no means saying that China's going to do it, because I really don't think they will. I think the Philippines is a bigger issue, but Japan gives you another outset and a friendly nation to the U.S. and the Western world that I think you could see that. So not only on the defense side, I think they could also really resurrect themselves as something much bigger on the semiconductor front. If only they had listened to their chairman, who they since fired on Toyota, when he wrote the 1690 rule, which was one EV, full EV can make a battery, can make 6 plug-in EVs, or they can make 90 hybrids. And they looked at this and said, 90 hybrids makes way more sense because you're going to utilize things much better. And if you look at the hybrid market versus the EV market, I dare you to go find a Kia Carnival hybrid that you can buy off the lot. But I guarantee you can go to any Ford dealership and get an F-150 Lightning. And it's because I think you're going to start to see that pivot. And if they really adopt that hybrid side, really push the semiconductor, and then really adopt the defense front, you could have them try to fill a lot of those holes.
You know, it's funny you bring up the Ford F-150 Lightning, because I saw the car dealership guys post about the gentleman who had to spend tens of thousands of dollars, far beyond what it costs for a Tesla, to replace his battery after 2 years. And folks, I got news for you. These vehicles are not really pickup trucks. They're just a Tesla with a bed. It's not a very well manufactured, engineered vehicle, in my opinion, but your mileage might vary until you get stuck on a bridge with a low voltage warning. Real quick, before we go back to Mark, macroedge.net/ozone, macroedge.net/ozone. Go there for your 2-week free trial. Read what our authorities say about this. Check out what we have to offer, our monthly real estate update, and more. That's macroedge.net/ozone for your 2-week free trial. Mark, we've gone through the whole of Asia, but we've got to touch down on Southeast Asia. And then we're going to talk U.S. markets. I'm sure you've got a few things to say about the bizarro land we've seen the last 2 months. We pivot down. We see the Philippines, which I think could be exploited for natural resources, but there hasn't been enough in-depth research because of the instability with the Islamic rebellion and with the problems with China, as you highlighted. Then you move down further south to Indonesia, which has all of the resources, all of the potential, the great relations with the Sunni nations in the Middle East. Which of those two could take the biggest leap forward, in your opinion, in the next decade?
I think Indonesia is right. I think that when you look at how they have positioned themselves, not only when you consider the Strait of Malacca and the power that they can wield coming across that, they have close relations with Singapore. They have a huge opportunity set in terms of not only the fishing front, but also on the raw materials. And if you think about the issues, and not to harp on Japan, but if just look at the rice contracts and look at rice pricing in Japan. You look at rice pricing and the issues that you've seen in terms of the cost of rice. There's a big concern about how do we manage this? Where is the food going to come from? Indonesia has some okay farmland, not great. So they rely significantly on the sea. And as you look at the 9-dash line, as China has drawn it, they claim a significant amount of these fishing areas for their own. You've seen clashes that obviously the ones in the Philippines are very much talked about or shown, but you don't see as much about the ones that are happening in Vietnam or the ones that are happening off the coast of Africa or even off the coast of Latin America on this illegal farming, fish harvesting. So they're sitting there looking at the tea leaves and they're saying, okay, well, that's a big tiger that, rolled out tiger politics, which who thought that was going to be a good idea? And now they're sitting, okay, well, where can I go? And I think the Middle East is opening themselves up to saying, come to us. We're investing in technology on the fertilizer front, on the agriculture side. This is where you want to be because we're going to help you. And I think that there is a great location that you could see them kind of leapfrog ahead of some of the other places. The U.S. has been unwilling or very hesitant about getting involved in the Philippines. I think if we really wielded the might that we have, we could definitely help the Philippines in terms of, continuing this growth that they started early on and then kind of petered out. They haven't had the same issues with food that some of the others had. So I think there's a lot of ways we could cultivate that on the rice side. Obviously, they would need our help pushing China off. But we've been hesitant to really have a direct confrontation. And that's where you would most likely have the most direct confrontation would be in the Philippines.
Yeah, well, two of the biggest mistakes that I can recite about the Philippines are Subic and Clark. giving those bases up was the stupidest policy America ever engaged in our history.
I don't
Dumbest
disagree
thing
there.
we've ever done.
Yeah, I don't disagree.
I mean, here we are now facing China with a potential conflict, and we took two of the largest military bases in the world and surrendered them for nothing.
Right.
In all practical purposes. And that's where we come back to policy mistakes in our past. We can't make them at this point in time. So when you see what's happening in Southeast Asia, and you and I talked about briefly, folks, there's a lot of conversations you do not see online that we have in private for obvious purposes. But the ASEAN nations, with playing both sides, could exploit not just the American markets, but the Middle Eastern and African markets. Is that going to be the centerpiece for the next decade as far as affordable, efficient, and intelligent manufacturing? Because let's face it, despite what people think about Vietnam, if you understand the country and read up on this, or had, in your case, probably have been there, I don't know, I can't speak for that, the education system's pretty damn good there. And they actually have the ability to sit there and compete with China in many of these high-tech corporations that we don't want China to have, but would love to have as sources of our own.
So that's why one of the reasons, to your point, Vietnam has been such a focal point for me from a lot of levels, both professional as well as just where kind of the growth is going to go. And I think that is where you're going to see the bigger focal point now is. And I went to the first week of April. My wife and I we went away. We went out east to the Hamptons. Spent a night because it's her birthday. It's our wedding anniversary. It's Mother's Day, getting towards the end of May, and I knew I was traveling. So we went shopping, and she went through the different stores, picked out what she wanted, and I'm a bit of a nerd, and I looked at all the clothing to see where they were made. And I thought it was fascinating where there was not a single piece of clothing or anything that had it shown that was made in China. It was made in Sri Lanka. It was made in Bangladesh. It was made in Vietnam. It was made in Laos. It was made in Mexico. It was made in Panama. So you're getting this shift that it started early, to your point, and in terms of that textiles leaving China because it's mobile. Whether I get polyester in Pakistan or if I get cotton in India, I can get raw materials very easily. And let's be fair, to make clothing isn't crazy and intelligence or really infrastructure strain. You don't need a ton of power to have a polyester facility making pants. Now, as you go up the scale of assembling a phone, putting together different wiring harnesses to create, a complex structure that's going to go into, let's call the sonar system of at the front end of a BMW or something of that nature, you're going to get further and further up to something that's going to require a much higher power cost. They're a bit of power pigs. They need a significant amount of pull from the grid. They need a certain amount of education in terms of how is this being done? What's the best way to do it? Is there a way to do it better? And how can I get it to the market? Am I closer to the end market? Am I further away? And all of a sudden, this is where those ASEAN nations become a huge opportunity. They have great ports. They have built up their grids over the years. They have some of the raw materials nearby, and they have the labor component. And they're going to be cheaper to get to their end market because they're thousands of miles of nautical miles closer to where they need to end up. So all of a sudden, China's sitting there, and that's where I do think the U.S. has an edge on China because people have already been trying to do this. Now, to your point earlier in terms of Trump in China, we did things too soon because most people hadn't been able to order their back to school and their Christmas orders. So we put a 90-day delay enabling people to make their orders. But realistically, in my opinion, those tariffs were always going to snap back. And when I spoke to my contacts and I said, hey, now that the tariffs are paused, have you changed your plans? They're like, absolutely not. We're signing a deal in Vietnam right now. We're signing a deal in Mexico right now. Like, we're moving. We're not waiting. We're gone. And I think that when you look at the next iteration of complex manufacturing and computing, that's where you're going to see those entities crop up in much bigger fashion, is going to be in those regions.
And that brings us back to Australia again, but that the copper shortages that we're about to witness in this world are going to be unholy. And folks, if you don't know, Dr. Copper dictates Nurse Gold every day of the week, 24/7. If Dr. Copper is hurting and prices are soaring, gold will follow suit, because a lot of the gold mines are shared as part of copper mines. It's one and the same in many cases, because you don't just mine for one mineral, boys and girls. You go for the whole thing, and you sort it out and you sell it. And if you make more copper than you do gold or silver, fantastic. However, once that extraction is completed and processing is done, the money prints itself. And I have a feeling with this revolution, AI, data centers, et cetera, you're seeing the same thing I am. The mineral-rich nations and currently petroleum-rich nations, that's going to evolve as we update our power grids and ability to make fusion, et cetera, cheap nuke. It's really great for resource-rich nations. And that's why I think India, Africa, Australia, and even South America provide massive investing opportunities.
I agree. And especially when you start looking at Latin America and the copper mines that are there, unfortunately, you've had this. I mean, it's both sides. It's not just, we can't just blame the environmentalists, because we weren't the best stewards when we were mining. But realistically, the mining process has gotten better. If you look at some of the things that the Robert Friedlander's company has been able to achieve with Ivanhoe, there's a lot of things that can be done that are cleaner, faster, and more efficient in terms of harvesting. Because, to build on your point with gold, copper, and everything else, they're also attached to other rock that you don't want. But in order to separate them, you're using sulfuric acid, you're using arsenic, you're using things that you really don't want in the environment long term, and you definitely don't want it in your groundwater. So there has to be a way to do it in a balanced approach. And that's where you've seen this huge, to your point on the shortages, this huge slowdown in capitalizing on these mines. So I think, and we could go through different opportunity sets, you have to get back to basics. We need physical stuff. I think crypto is adorable. I think Bitcoin sounds great, but if an EMP bomb goes off, or if you can't get enough copper, good luck getting the power that's going to push the next iteration. When I was at a conference in Barcelona, there was a great quote about power consumption. So if you look at ChatGPT has 300 million subscribers. Only 20% of them use the quote unquote advanced function. The other 80% just like play around with it, saying like, draw me as like a Mario character or some other absurd thing. So there's very little usage of it, but yet, or I should say the potential of it, but yet it consumes more power than 119 countries. So when you look at it, if they showed this where, if you convert those 80%, so say you never get more than 300 million people using ChatGPT, but you convert that 80% into the power users, you would be the third largest consumer of power in the world. So the sheer amount of electrons that have to be generated, that have to be moved, is massive. And this is, and as we know, people will adopt it. 300 million will become 700 million, and it'll continue to expand. And that's something that we have to appreciate more, because even in Africa, I mean, people, if you go to Africa, and a lot of them will have cell phones, and a lot of them are going to have WhatsApp, and you can communicate using WhatsApp translation. And I don't think people appreciate how far reaching a lot of this is going to be in terms of the energy requirements that are going to take place over the next 50 years.
And amazingly enough, the former colonial powers that oversaw most of these regions has no foresight, has no plan, and has destroyed their own national union, the European Union, instead of turning it into an investment powerhouse by unifying fiscal and monetary policy. Does that not blow your mind on a historical perspective?
I laugh because I just had this conversation yesterday. It blows my mind that, like, you look at Germany. Germany had one of the most advanced, technologically savvy coal facilities that essentially had like a 98% clean factor. You could have gotten rid of the other 2% on a CO2 sequestration, or actually injecting hydrogen into the burn, because hydrogen increases the underlying flame, which then burns up more of the pollutants. And instead of even just mothballing it, they tore it down. And I'm like, guys, what are you doing? Like, if I'm BASF, if I'm Mercedes, BMW, and I have to figure out my next iteration, my next facility, am I building here? Absolutely not. I'm building somewhere else. To your point, it's like, how did you get this so wrong? Even though you've been told time and time again. Obviously, Trump had his thing in the UN. Everybody laughed. He ended up being right. But even the experts were telling you, hey, guys, like, you've gone too far down the rabbit hole. Pull back. And here we are.
Yeah, we don't even want to talk about the German military. That's even a bigger joke. We'll save that for another conversation. Let's talk about U.S. markets, because today's news on the PCE and personal income was distorted, which I think has an impact over the long term. I think we're going to see a bounce back in inflation. I'd like your take on that, because we had a one-off on personal income with a massive payment under the Social Security Fairness Act. It was a one-off payment made in April and May, and I don't think people understand these one-off payments distort the data. But if you look at the retailers reporting and everything else, it's not been a great quarter as far as retail is concerned, especially with Best Buy warning. And we still haven't really taken the tariffs into account as costs being translated over to the consumer. Is that a part of the market is that part of the economy that I think the market is just turning a blind eye to and may end up paying a dear price for in the months ahead?
I agree. Like, when you just look at the flash data, so a lot of the flash PMI data came out, and they actually showed a reversion of inflation higher, where I think a lot of the things that we've seen with PCE being the most, quote unquote, lagging, if you will. So for those that don't know, you have leading, real time, and lagging indicators. So a flash is going to be something that is going to be kind of quick hitting, a look at what has happened today and what is to come is going to be a leading indicator. And the leading indicators are showing an increase in inflation. Now, you have some seasonality in that because you're switching from winter grade gasoline into summer grade gasoline. For those that don't know, in the summer, because of the heat in the atmosphere, you have to change your read vapor pressure, or your ability for the smog, if you will, to get through the atmosphere. In the winter, you can use more benzene. During summer, you can't use benzene because it's a bigger molecule. It doesn't go through the atmosphere. So summer grade is inherently more expensive to make. So gasoline prices will naturally go up. To your point, you have the tariffs that the pause, if you will, enabled some additional flow, but it still carries a higher cost. Some of the companies have said we're either eating the cost or we're passing it through the consumer, and there's interesting ways that they can kind of get around that, but it's still going to reflect a higher price. And so all of these things are going to play out when you look at the cost of gasoline. When you look at the cost at the service side, services had a big drop. That's gonna bounce back up. Those goods are going to come in, and they're now able to come in. It's going to be at a higher price. And then look at distillate. Like, one of my favorite quotes, and I did a talk yesterday with Primary Vision, where we talked about, diesel. My favorite quote being, my death has been exaggerated. Diesel's your perfect example. Like everyone that you've listened to is like, oh, we won't need diesel in 25 years. It's going to be obsolete. No, diesel now in the distillate pool is at a near all-time low in terms of what's in storage. That's going to drive up pricing because I'm going to, shocker to you or to anyone on here is that ships and trucks move on diesel. And if those prices are high, that's going to show up in everything from the stuff you buy for your kid's birthday to the hot dog that you're gonna barbecue on the grill, to the propane that's running your grill. You're going to see those prices come up. So I think this was a lull. We'll get that bounce. And then when you look at spending is impaired. And you look at prime credit card rates are the amount of people who are deemed prime on credit cards is falling exponentially. You have these people who can no longer pay. What is it, Karma or Carpa, the company?
Oh, BNPL. Yeah. Buy now, pay later. Good
right.
God, don't get me started on that one again.
Well, so it's like, so if you can't afford to buy a Chipotle burrito without a 4-month, equal payment, there's a big problem. And I do think that you're going to get that inflation bounce, but realistically, the consumer can't buy. Like they are tapped out. And you saw it. I don't know if I sent it to you, but the Hamptons vacation rentals are down 40%. Vacations booked by now is down close to 45%. So you're looking at people saying, I'm not going to travel, I'm going to do day trips, or I'm going to do staycations. And that's not a sign of a good consumer, especially as these prices start to go up.
Well, I'll fill you in on something that hasn't been made public knowledge unless you follow the vloggers. That's the vloggers, folks. Disney and Universal's new Epic Park attendance is down for the past week. Now, there is some year-end school closing out in Florida that does influence that, but it's very unusual for Memorial Day to see a downtick in traffic, and that's a red flag, which means that the Central Americans aren't coming up. South Americans are not coming up during their winter months, and that other people can't afford to travel inside the United States down to Florida. That is huge, in my opinion. Not as big as the Hamptons, because what are those poor unemployed helicopter pilots going to do?
Well, the reason why I bring up the Hamptons is because one of the things that was quoted when you looked at consumer spending, everyone that would push back on me would be like, oh, look at the consumer. The consumer is fine. It's like, no, you're looking at the national number. And the problem with the national number is people in that level of wealth really don't stop. Like they're impervious. Like, okay, if you can afford a Louis Vuitton, you don't really care what the people are doing that shop at Aldi. But the Hamptons is reflective of that. The Hamptons is showing you the uber wealthy and their inability to spend. And I think that's the biggest issue where, to your point on the data is really going to start to crack. If you're a nerd like us and you're digging into the segments and you're looking at, okay, well, what does the lowest 20% income level do? You've seen these cracks forming. This was no surprise to anyone. But it was because the data of the top 10% was able to really disguise that. And the fact that the Hamptons is cracking, the fact that vacation rentals are down significantly. And if for anybody who's been to Disney World, my God, like you might eat, I don't even think one kidney would solve, a family of 4 going to Disney World. So you're getting to a point now where people can't afford these vacations and these enjoyments of, Disney World at $15K a pop. A Hamptons house that's going to cost you $30,000 a month. All of a sudden, this starts to catch up for even that level, and that's when you start to see the much bigger hit to the data points.
So, with that being stated, and with your theory agreeing with mine and a lot of the MacroEdge team, that we're going to see a little cyclical increase, shall we say, or impulse in inflation over the summer. Is it not overly speculative of the market to get ahead of itself and think that all is well, the trade war is over, everything's going to be peaceful, the bond market stabilized, Japan's going to be fine, don't worry about it? I think we have too many variables to sit there and say, hey, it's a new bull market. I've seen this before. We saw it in 2007. A lot of us were around for 2000, and some of us old guys were around for 1980, 81. Don't even get me started there. That was another era entirely. In your opinion, do you think they're over their skis?
100%. And I think where people get it wrong is rates. And to your point on what the bond market is saying, the 10-year hasn't been able to drop. There's been a lot of reasons you should have seen the 10-year go to 4.15%. But instead it hovers at that 4.5% because the bond market's not being fooled. When you look at what's happening, we have not had an increase in the debt ceiling. So realistically, Bassett has come out and said that there's $240 billion in the coffers. It runs out by August. We still have to roll 9.2 trillion US dollars of treasuries. And that doesn't include the fact that typically the treasury likes to have between 800 billion to $1 trillion in it. So the moment you get a debt ceiling increase, he's coming to market to bring in 600 to 700 billion into the treasury. That's going to be a mixture across the board. You've seen terrible internals when you look at bid to cover, which is how many people show up to purchase. The international markets have bailed us out, but they're also getting pushed to the extreme where as the supply of paper comes to market, it's going to be very difficult to keep them involved because we need to bring in more buyers. If you want to bring in more buyers, how do you incentivize them? You increase the yield that you're going to give them. So I think that right now the inability of rates to fall is the problem. And the moment, and I think it does happen over the summer, when you see that movement, you're going to see that snapback. You're going to see pretty much a one-way train to a 10-year at 4.75%, likely going to go to 5% by the end of the year. I think 5 to 5.15%, you're going to have a lot of buyers and it'll likely pause. But that's a big number given the amount of leverage in the system. And if you look at the deficit, which clicked in at 2 trillion, there's not, that doesn't even, I haven't even touched the 2 trillion deficit that has to be covered. I'm just talking about what has to be rolled and what has to be used to refill the coffers. So I think that just the sheer supply demand dynamic is going to put that higher, which is going to put way more pressure into the equity markets, especially the Russell 1000, which are very sensitive to rates. And I think it's going to put even more pressure on the banking system. I don't think people appreciate the level of or ignorance when it comes to hedging duration that is going to leave them with exponential losses that won't be able to be written off. That can't be filled, that will have to be written off. And that's going to make earnings look that much worse.
And folks, Mark hit this point earlier. Japan did not hedge duration like Bank of America on U.S. bonds. They also didn't hedge their own long bonds. This will have consequences in their participation in future bond auctions. Yes, they'll buy what they have to, but we had this big report and every big to do about the 5-year having the highest foreign participation ever. Everybody forgets in 2020, it was the dirtiest shirt in the closet, but you had to buy the American 5-year bond because of the pandemic and the uncertainty about the outcome. Well, guess what just rolled over in May of this year? A lot of those bonds. Now, if you can roll over from a 1% yield to a 5% yield, hell yeah, I'll do that all day long, 24/7. Because a 5-year yield in the terms of a major investment bank is not a big deal. Mark, would you like to address that?
It's 100% correct. And the thing is, like, Joe, so you're going to get guys taking that in, but think of it from our perspective, we have to pay that interest. So what does that mean? We don't have that money. So we have to go out and borrow more to cover that higher interest. And that's when you get on that, for those that have heard the term, the debt spiral, where you're now in this negative feedback loop where every single time you go to market, you're increasing. Forget deficit spending, forget everything. Just assume all you need to do is roll what you're rolling. That's only going higher because instead of paying 1% fees yield, you're paying 5%. That's 4% more that you have to borrow from someone else to pay, again, borrowing from Peter to pay Paul. And that creates that negative feedback loop, which is why rates are in a move higher and equities are going to be under pressure. Because at the same time, do I want to risk myself in NVIDIA at X%, or do I want to buy, a bond that realistically will get paid back at a 5% yield?
Mark, you're a professional investor. You've done this for a while. You understand it. We talked global first, folks, because there's opportunity. Money doesn't just sit there in New York City and stay there. It moves to London, it moves to Tokyo, it moves around the world. Wherever there's opportunity, the trillions follow. But I do have a problem with what's happening in America right now, and I wanted to bounce this off you as a professional. Retail seems to be declared the hero. They're the experts now. My problem is every time you look at history, dating back to the 1890s, 1920s, the 1960s, the 1980s, retail is the bag holder 99.9% of the time. Do you think they're too busy following the narrative instead of actually reading the numbers? We'll close out the show on that. You're on your thoughts there.
So I think the issue now when you start looking at retail is they have more power than they have in the past. And and what I mean by that is many of the times, given the dates that you gave, the 1980s, the 1990s, only the richest of the rich had access to leverage. Goldman Sachs or Chase Manhattan wasn't giving the guy in his mother's basement leverage. He was going to give the guy that owns 100 McDonald's or is the senior vice president of X and Y company or the head doctor of cardiology. They're getting leverage. Now you have the ability for the lowest of the low on a retail side to get access to leverage. So now you have the ability where they're following the computers. A lot of this is momentum trading, and they're chasing this momentum. And so you get this exponential move, which then triggers into other things. If you start getting into the Greeks and options, where you have a gamma squeeze, you have these movements that can happen. If you look at what happened with GameStop, what happened with Bed Bath & Beyond, very similar situations. So now you have a retail market that's massive, not real massive, but on a notional basis with leverage, very big. And they can push around the market to a degree. Now, there's always going to be, that showstopper, and that showstopper that essentially sends them crying because they are also not strong hands. There's someone that maybe got into, NVIDIA only $25 away, and all of a sudden NVIDIA drops, and I'm just picking on them because the tech bubble is where you could see this, where all of a sudden those losses start to mount as their cost basis gets blown through, and all of a sudden those losses mount. And now Goldman Sachs, or whomever that they got leverage from, is calling and saying, I need you to post collateral. And they're like, well, I don't have collateral. So that company will force sell you in. But if you get forced sold in, your account doesn't go back to zero. You borrowed, you accrued interest, you accrued cost. You now have a negative $12,000 bill where you have to pay them in order to be made whole, in order to trade again and get more leverage. So the wheels, it takes time, because there's so much in there, because there is that uncertainty. That is where I think you're going to see retail really be the bag holder again as you go through, and the rates really do it. I mean, you mentioned 2007, seeing this game before. You had people buying a third home, as a janitor making $65,000 a year because nobody asked about your salary, and they were giving you leverage to go buy that third home. We saw what happened there. Now, instead of it being in homes and illiquid assets, it's actually in liquid assets and things that don't have as much volume because everybody and their mother wants a buyback. So now you have less volume in the market. It's much easier to move things around because, just to give you an example, when I started my career, I could buy 10,000 shares of Exxon and not even move it a penny. By the time, let's say 2019 came around, if I wanted to buy 10,000 shares of Exxon, I could move that stock 30 cents. And it's because you've seen this reduction of float that now you can push things around with less volume, with more leverage. And I think that's where this all ends in tears.
I agree. There was a penny stock that has I think it's 600,000 share float that skyrocketed from like $3 to over $79 this week. I've got to go back and look at my notes, but it gives you an idea that when you see just a play toy with a small float suddenly trade 19 million shares, the market is broken.
Yeah.
And there is a way for it to repair itself, and cyclical history dictates that will occur. So people, I think Mark is trying to tell you, if you don't know what the hell you're doing, sometimes paying a professional might help. With that, Mark, please tell them how they can contact you and save their ass before they end up being their Tesla repossessed by Goldman Sachs.
Well, I appreciate it. It's at Mark FNY is my Twitter handle, or you can reach me at mrossano at c6capitalholdings.com.
Mark, we appreciate your insight, and thank you for providing a different perspective. A lot of times we've been focusing on real estate and everything else, but if you start looking overseas, there's money to be made. Don't follow the flow, follow the opportunity. After all, Warren Buffett didn't sit there and just put all his money into the market. He picked and chose his moments. It's there if you want to do the research. For MacroEdge Radio, go to macroedge.net/ozone for your 2-week free trial. This is John Galt. Good night now.